Hello, everyone. Good morning and welcome to another webinar session with you guys. It's quite amazing having a lot of people on today's webinar. Thank you for joining me. I'm your host, Akinwale Chibike. And on today's webinar, we'll be talking about the Smart Trader's Guide, which is a smart trader's guide towards trading gold. Okay, gold is a commodity in the financial instruments, and it's very volatile. Okay, very volatile. You can make a lot of money trading gold, and that's why I'll be teaching about it today. Okay, I'm teaching about gold today, and I would love everybody to pay very good and close attention. Okay, so I'm your host, like I said, Akinwale Chibika, and it's amazing getting to see Debbie, Kelechi, Sawyer, Olarewaju, Philip, Olusonya, Halima. It's amazing getting to see all of you on today's webinar. How are we doing? How are we doing? How's it going? Okay, great. It's quite amazing having everybody on here today. Morning. Yeah. So, real quick, let me tell you guys a bit of something that happened to me in the financial markets last week. Okay, so last week, I decided to not trade my trading plan. Okay, I decided not to trade in alignments to my trading plan, and yes, I made money while trading. Okay, I made a lot of money while trading. I was aggressive, venturing into almost all those financial instruments I promised myself I won't trade, trying to catch every single move in the financial markets last week, all last week. That was what I was doing. And after making 25 to 30% of my trading account last week, I literally gave back everything to the markets on Thursday and Friday. I gave back everything to the markets and a bit of my capital too back to the market, just because of I decided not to trade my trading plan. And the moral of this lesson is anything you do in the financial markets, please always follow your trading plan and your risk management plan. Yes, it's interesting to enter 15 trades, try to stake enough position to catch a lot of pips. But yes, it's good, it's amazing, it's interesting, it's very volatile. You get Angeline flowing through your veins and you want to do it over and over again. You think it's the right thing. I promise you, you don't want to have the same experience like I did. Okay. You don't want to have the same experience like I did. You don't want to have the same experience like I did. Okay. So follow your trading plan. Don't try to sway away from it. Okay. Don't try to go through the corners and not follow your trading plan. Please always follow your trading plan. If a pair doesn't give you something very clean to see, just ignore it. Don't try to force a trade. Okay. I did a lot of that last week. I made money from it, yes, but in the end, I lost all the profits I made. All the profits I made, I lost. And you don't want to be that type of person. You don't want to be that type of person that makes around a certain amount in the financial market and lose it all to the market back. Yes, lessons learned. I won't be trying that again. So it's just an experiment to see how well I can control my emotions, risk management without those plans. And it didn't work out. Okay. So I would like us not to try it ever again. Okay. If you're doing it, just stop it. Just stop it. If you need a trading plan, I would share a trading plan of a popular trader I follow. I'll share his trading plan online, and you can in the Telegram group. You can tweak the trading plan to your own taste and see how it resonates around you. Okay, because that's what I did also. And yes, please let's not trade aggressively. Let's always be cautious of what we do in the financial markets. Let's not be trigger happy. Let's not be trigger happy with the buy and sell buttons. That we get to preserve our capital and we get to grow our capital. I said the best way of making money from the financial market is by compounding your capital. If you have 10,000 naira as your capital in your cloud trade, or you have $100 as a capital in your what's it called, in your MT4. Okay, in your MT4. I'm not trying to lie to you or make you happy or anything, but the truth is, if you trade with strict rules and regulation, you follow your trading plan consistently, you abide by your rules when trading the market, I promise you, you can scale that capital. You can scale that capital your 10,000 naira capital, you can scale it to 1 million naira in the matter of 3 to 6 months. No jokes at all. You can scale your $100 and your MT4 to $1,000 in a matter of 3 to 6 months. It's no lies at all. It's something I've done before. It's something I can do with my eyes closed. It's something I can start tomorrow if I want to. It's very, very easy. That's why I always make mention of having a trading plan, something that the rule and regulation that you abide by when you're trading in the financial markets. Okay. So that is the simple truth, and that's the confession I had to make. Okay, that's the confession I had to make. Well, it hits me a lot. I thought I was going to spend the money over the weekend and all, but lessons learned, and that's what I'm sharing with everybody. Let's not try to prove points to people. Let's not try to, someone is doing $10 to $500 challenge. Don't get involved. It will ruin your mindset. You become more aggressive. You try to meet targets. You try to prove that you know what you're doing. You know what you're doing. You don't need to prove to anybody. Okay, just like I said, you don't want to be a professional. You want to be profitable. Okay, you don't want to be a pro trader. You want to be a pro trader. You don't want to be a professional trader. You just want to be a profitable trader. You see, because some professional traders are not profitable at all. They are not profitable at all. They will mark out the charts for you. They will give you this. They will give you that. They will give you this. They will give you that. In the end, they can't make money from that analysis, and the analysis will play out. While some people, they'll just do it very basic, and they rake a lot of money from the financial market just from that. So I'm just sharing the experience with you guys so we don't make such mistakes again. Well, I don't make such mistakes again, and I say the truth. Okay, I was trying to make a confession to you guys. So just now I dropped USD CHF chart. Right now you can check the Telegram group. I sent the trading view USD CHF chart. You can see it went to my order, and I did something again that I would advise anybody not to do. Okay, if you go to the Telegram channel also, you see what I did again. That's poor risk management. I'm trying to show you guys this thing so that we can all understand these are bad habits in the financial markets. Yes, the analysis is right, but everything I did right here was bad habits. Okay, bad habits, habits that traders have that won't make them profitable at all in the financial market. Don't have such habits. Yes, some people are very good at stacking positions. I'm very good at stacking positions. I'm very good at adding positions to scale my trading account. Yes, it's good to scale your trading account, but always compound the right way when you're trading. Just compound the right way. Don't don't try to rush it. Don't try to force it. The profits are yours. It will come to you. There's no reason to rush it at all. Okay, no reason to rush it at all. So you don't want to you don't want to do those things at all. You just want to be focused on making money in the financial markets. Oh, okay. You guys are not on the Telegram group. I'll share the link right now. But those on the Telegram group, they can see what I did. I was thinking it won't activate the order. Okay, I thought it won't activate the order at all. And see what happened. The order got activated. The order got activated. And I had to go and manually enter instead of entering with a limit order that I was comfortable with after manually entering due to something I saw earlier. Okay, so this is the Telegram link in the chat box. So let's talk, guys. How was your trading week last week? Okay, or how has the trading week from Monday till today been? How has it been? We can see wow, a lot of wow in the financial markets. A lot of wow has happened from Monday till today. How has it been? Share your experience. How has it been? How has it been? Morning, Alimat. Morning, Latifa. How you doing? How has it been? Let's share our experience. Or just the price action that happened yesterday. Just those big moves yesterday. How has it been? How did you feel? Hope you didn't get caught up in it. Hope you didn't lose money to it because it was wow. That's really expression. Wow, because the markets moved a lot from Monday to yesterday, and a lot of people made money, a lot of people lost money. I hope you didn't lose money. Okay, I hope you didn't lose money because capital preservation is key. Growing your capital is key. That's what you should be after. Enjoy the process of making money. Enjoy the fact that you understand how to make money from the financial markets. That's one of the amazing and beautiful things in the financial markets. Okay, exactly. Those moves were expected, but not everybody expected it. Okay, I expected those moves. You expected those moves because of you. You knew it was going to happen. You knew from a certain perspective. I'm not trying to make mention of the perspective so as to just not confuse anybody, but they were expected. Yes, we know they were expected. You just have to be positioned for it. Okay, you have to be positioned for it. You have to be positioned. Yes, I made money from those moves yesterday also. Debbie, yes, that's good. That's good. You've been growing quite. You've been making a lot of profits lately, and Kelechi has been doing a good job sharing out analysis regularly on the Telegram group. Kudos, buddy. Kudos, kudos. And also, I don't really trade short term and all. That's why I don't share analysis regularly in the financial markets on the group. Like the last analysis I shared before the USDCHF was ERGBP, I think, right? ERGBP, the short. It did not even meet my entry. It didn't go to my limit order. It didn't go to my limit order. I even missed the entry also, but it played out, and we can all remember. And USDCHF for the sell is already playing out. We'll be waiting for the buy, and in the sell, I'll be taking the buy also. Let's just position the right way, okay? The same big move will happen. You just need to position the right way. And yes, I think last week was amazing for everybody, and also yesterday was amazing for everybody. So before we hop into today's session, does anybody have a question at all? Anybody have a question? Don't rush into it. You've missed it, let it go. There's still the buy for you to catch. Okay, there's still the buy for you to catch. Um, the trade is 5R. 5R. You'll be making 5% of your trade. Okay, it's 6R after adjusting my stop loss now. It's 6R. You make 6% of your trade. Easy peasy. Easy stuff. Don't just go aggressive. Okay, don't go aggressive. You've missed it. Just let it go. Just let it go. You've missed it. And we'll be using a 10 pip stop loss to catch 61 pips or 62 pips in total to be precise. And that's good risk management right there. Good risk management right there. That's some good risk management right there. NFP tomorrow, exactly. We've got NFP tomorrow. We've got NFP tomorrow. Wow, we've got a full house. We've got a full house. Okay, let me just drop a poll and okay, I just sent out a poll. Please let's respond to it. We've got NFP tomorrow. Also, I said, has anybody got any question at all? The rule still stays the same. The chat box, the chat box for conversations, the question section to ask questions, the post to interact with my questions that I ask. Okay, so please let's respond to the post. Thank you. Let's respond to the polls. Okay, let's respond to the polls. Okay, in the absence of no question, in the absence of no question, in the absence of no question, um, today's topic is the Smart Trader's Guide towards trading gold. Okay, Smart Trader's Guide to trading gold, and basically, what do we understand by gold? Okay, what do we understand by gold before we start hopping into it and all? What do we understand by gold? What do we understand by gold? Or what do we know gold as? Let's start from there. So what do we understand by gold? Okay, what do we understand by gold? A valuable treasure. Brilliant. I love that. A valuable treasure. A valuable treasure. A valuable treasure. That's great. That's very, very great. Valuable mineral resources. Okay, that's one point there also. That's one point there also. Anybody else? Anybody else? What do we understand by gold? No, it's quite easy. It's quite easy. There's no need to rack your brain around it, trying to get. Okay, Jonathan wants to give us a definition. A store value of wealth. Brilliant, brilliant. I'm loving the whole idea of different definition and everybody resonating around it. Like basically, everybody is correct. Everybody is correct. Every single person is correct on my webinar. Now, the idea is we might not be correct when it relates to the financial markets, but we are correct with the definition and our own thoughts about it. Now, that's the major thing. And that's one amazing thing. That's one thing that is very, very amazing. Okay, so in today's webinar, what we'll be talking about. In this session, you will learn trading gold. What is gold? What moves gold? Understanding the perspective behind gold, trading gold in the financial markets, then in conclusion. I'm going to make this class super interesting and excited. Okay. Gold on the FX derivative is gold on the FX is derivative of physical gold. Brilliant, brilliant. Gold is fiat used to measure dollar value. He's using my word, Karachi. You're using my word, right? I remember I said this when I was talking about correlation of instruments in the financial instrument, of asset classes in the financial instrument. Yes, you're right. You're very correct. You're very correct. But let's dive right into gold. Okay, what is gold? I'll be candid with you. Gold is money. Okay, gold is money. Gold is money. And how is gold money? Before the introduction of fiat, like we all know, gold was what we spent. Okay, gold was what we spent. And how do we spend gold? We give gold in return for goods or commodities that have the same equivalent value of the gold that we give out. Now, when I say the same equivalent value, gold is durable. It can be splitted into parts. And the bigger it is, the bigger the goods you get for it. The smaller it is, the lesser the goods you get. Do we understand? Like, that's basically what gold is. Gold is money, but this is in form of a natural resources. Okay, and like I said, it basically is durable, can be measurable, can be broken into parts, and it has a lot of feature than fiat. And that is why we have a derivative of physical gold in the financial market. Now, when we say a derivative of physical gold, what it means is if gold is selling for, if physical gold is $2,000 in the financial market, price of gold is equivalent to 2,000 naira, 2,000 naira or dollar, depending, okay, depending on the financial or the money class of the community you're in. Okay, now that is basically what gold is. Let me explain to you. If you have a pair of Nike Air Force One, okay, that's a sneakers, it's a shoe. Okay, if you have a pair of Nike Air Force One, now the shoe costs about 50,000 or 100,000 naira. You can give somebody that shoe in return to get 5 bags of rice. Okay, that's just a life example of what gold is. Gold is money and can be used to exchange goods and services. Do we all understand? Yes or no? Do we understand? Yes or no? I'd like to get a lot of response. I'd like to get a lot of response. In some places, they call gold the other currency because Gold is one of the oldest means of financial instruments. From the ages of Pharaoh and the likes, we've been using gold to transact. I'd like to get a lot of response. Do we all understand? Yes or no? I could explain over and over again if nobody understands. Brilliant. Now, still under what gold is. You've heard me talk about if a dollar bill is created, there's a gold equivalent value kept in a vault. That's what is called the gold standard. Okay, the gold standard is a fixated monetary value under which a currency of a certain economy is fixed and can be converted to gold easily. Now, let's take for instance, remember I said for every $100 bill in our previous classes, I said for every $100 bill, there is a gold equivalent of that dollar bill saved somewhere. Now, the reason gold backs up, yes, Kelechi, let's not bring that here yet. Let's not confuse them yet. That was in the past, but everybody still believes it's the same, okay? Everybody still, I know it's not the same anymore, but let's just leave it that way. Let's just leave it that way. Okay, let's just leave it that way. Okay, just for living sake, let's leave it that way. But we do know that it's not done like that anymore. Central banks just print money the way they like, and they don't keep any gold in the reserve. We know that that's one simple truth. Now, I said for every financial instrument, for every currency, okay, for every currency of a country. Now, the United States, for instance, if the central bank prints $1,000, Karachi, I'll explain to you. Just drop it in the question section, okay? Drop it in the question section. I'll tell you why. Just drop it so I don't forget. I don't have to look for it in the chat box. Now, for every $1,000 bill printed, we have gold of such equivalence kept in the Federal Gold Reserve. Okay, that's the general rule. And that is why, as gold is paired to dollar, there is an equivalent value for gold. That means if we say $1,000 is printed, it is equivalent to a certain amount of gold. What it basically means is gold now has a monetary value. Gold now has a monetary value. We can now say 1 ounce of gold is possibly $4,000. 1 ounce of gold is $6,000. That's what we can basically say. So that is generally what gold is. Do we all get the picture now? Do we all understand the concept of gold? Do you understand the idea behind gold now? Okay. Do we understand? Yes or no? I'd like to get a lot of response. I'd like to get a lot of response. I'd like to get a lot of response. A lot of response. Okay, yes, I'm seeing the thumbs up. I'm seeing the thumbs up. If you don't want to type yes, if you don't want to type, just use the emoji icon. Okay, brilliant. Now, let's go to what moves gold. Okay, what moves gold? Now, I said gold is the oldest currency, okay? The oldest currency in the world. And that is why, if anything is being said, if you watch these financial channels like CNBC, Bloomberg, and the likes, you will find out that they always make mention of gold and dollar relatively. Now, the truth is, gold has been the oldest currency. You can't just wipe away something everybody has known for thousands of years. Okay? You can't wipe it away. So, what we did, or what the banks did, was to embed gold into every financial instrument. Into every financial instrument. That's when you now get to hear the word a certain amount of gold is being saved and a certain amount of dollar is being printed. This is when you get to hear those type of things. Now, what really moves gold is inflation and deflation in an economy. Okay, everyone has an opinion about gold, but gold itself reacts to a few number of things, not what everybody's saying. And they are what? Inflation and deflation, greed and fear, supply and demand. Those are the three major things that moves gold. Those are the three major things that moves gold. Now, inflation and deflation, it all still comes down to the bank. Banks are the one that decide interest rates. Decision of interest rates will lead to inflation or deflation. Basically, banks decide interest rates. When there is decision of interest rates, it can lead to greed or fear. Banks decide interest rates. Once they make such decision, it can lead to increase in supply, decrease in demand, decrease in supply, increase in demand. So basically, the major thing that moves gold as it's of today is the interest rate from banks. Then the interest rate from banks is what now makes the three major factor everybody thinks are what decides the volume, the sentiments, and the trend intensity of gold, such as inflation and deflation, greed and fear, supply and demand. Do we understand? Jonathan, I'll answer your question at the end. Just keep dropping your question in the question section. Do we all understand what moves gold now? So what moves gold is basically interest rates from the bank. Then, once the interest rate is set, inflation and deflation will start occurring. Supply and demand will occur. Then, greed and fear from humans. We think we move the price of gold. Then, fear and greed is what will come. Our emotions will come into play and we'll start reacting to price or to what interest rate is. Then the reaction starts occurring on gold, on the price of gold. Do we all get the concept now? Yes or no? It's a simple yes or no. Do we all get the concept now? If you've got any question, please keep dropping your question in the question section. If you're not a live client of Eagle Global Markets, or you're not a client of Eagle Global Markets, please go to access.eagleglobalmarkets.com. Okay? EG Markets, eagleglobalmarkets.com. Sign up an account with us and get started trading the global financial markets. Okay? I'll be sending out a poll right now. We are much on the webinar. Let's try to respond to the polls. Okay, let's try to respond. I don't like the figures I'm seeing here. That's why. Okay, let's try to respond to the polls often or more. Okay. So I just sent out a poll right now. Are we all following? Let's respond to it. If you're not following, just put no. If you're following, just type yes or just tap on yes. Simple and easy. Are you a live client with EGM? Let's respond to it also. Okay. Let's respond to the polls. Let's respond to the polls. Thank you very much. Now, understanding the perspective behind gold. Okay, that's where we are going to now. Now, the perspective behind gold is the correlation between gold and dollar, or gold and certain financial instruments. But majorly, what everybody knows is the perspective behind gold and dollar. Okay, and that's what I'll be talking about in detail. Okay, I'm talking about that in detail. So let's pay close and good attention. Okay, close and good attention. Because that way we can all gain from the knowledge shared. We can all gain from the knowledge shared. Now, understanding the perspective behind gold. The major perspective behind gold is simple, very, very simple, which is gold and dollar correlates negatively. Okay, they correlate negatively. Now, I said something earlier, which is for every certain amount of dollar bill created, a certain amount of gold in such equivalence is kept in a treasury. Okay, gold treasury, that's what they call it. Now, the truth is that was in the past. Now, this is what Kelechi was talking about. That was in the past. In the past, we all believe that, or we were told and we believed that's what they do before in the past. Okay, every dollar bill printed, there's a gold equivalent kept somewhere safe to replace that dollar. But that's the gold standard. Do they do that, or do they continue doing that? I don't think so. I don't believe they are still doing that. Why? Because the central banks just keeps printing money, and there is no way to explain how will you be printing around 10 million to trillions of dollars, and how will you get a gold equivalence of such amount in a treasury? It still doesn't add up. Okay, and that's the perspective behind gold, which basically now is simply, if gold is going up, if gold is increasing in value, dollar will continue dropping in value. Exactly, Barnabas. We're very correct on that. Very, very correct on that. If dollar is going up, gold is going down. Now, if the gold standard were to still be the same, and they said $1 is the same as a certain amount of gold, they are both supposed to be stable. But the reason for the difference in supply and demand is you can't meet all the demand for gold, and you can't meet all the supply for gold. There are more demands for a dollar bill. There are more supply for there are less supply for gold. Sorry, they can't produce gold. It's a natural resources. So a lot of money needs to be put into circulation. A lot of money needs to be put into circulation, and there's not enough gold for that. If we have fiat that is the equivalent amount of gold, not everybody will have a lot of money, and fiat will be of high value that there might be an apocalypse. Okay, exactly, they are inversely proportional. They work oppositely, and I'll show you proofs from a chart. Okay, I'll show you DXY and I'll show you gold on the chart real time, and you see how they move differently. Now that's the perspective behind gold. And that is why gold is very volatile, because everybody is fighting for a piece of it. Even a regular man is fighting for a piece of it. Everybody's fighting for a piece of gold. That's why you see gold is very, very volatile. If you have small capital in the financial market, I don't advise you to trade gold. Fine, you make a lot of money there. I even advise you to trade the Dow or Nasdaq or S&P 500 than trading the gold, because once the volatility on gold starts and you are caught up on the wrong side, you end up losing money. Yes, before exactly they were positively correlated. And that's just the perspective behind gold, understanding the perspective behind gold. Now, trading gold in the financial market. I'll show you on a live chart how you trade gold on. Now, how to trade gold in the financial market is very, very broad. So we're talking about a certain aspect of it, okay? We're talking about a certain aspect of it, which is day trading gold, okay? Okay? We'll be day trading gold, and we'll be using a approach I learned to trade gold, okay? So I'll be sharing my screen right now, and I want us to take a pen and a paper, take notes, okay? Take notes, because this might be all you need. Kelechi, can you remind me the moving averages we always use? This USD right here. So let's go to gold, okay? So I said we'll be learning how to day trade gold, and I'm not lying. See how volatile gold is, okay? So you don't want to be caught up on the wrong side of this kind of move. You don't want to be caught up on the wrong side of this kind of move, okay? You don't want to be. Brilliant. A lot of people know the moving averages, and that's what we'll be using in this session. Okay, in this session. Now, day trading gold. Uh, First thing first. Okay, first thing first. You want to mark out a month or months of data. Okay, you want to mark out months of data. Now, if it were to be how to swing trade gold, I would have said we should mark out quarterly data of gold, but let's do it the old school way, which is day trading gold. And we'll be using months of data. So we're starting from 1st of April to 30th of April, or 1st of April to 1st of May, 1st of May to 1st of June, then 1st of July to 1st of August. Okay, so now the moving averages we use are the EMA 9 and 18, exponential moving average 9 and 18. So I'll just add an EMA, exponential moving average. Okay, exponential moving average 9 and 18. I'll just make 18 color red. Okay. Now, this is something you'll find amazing. Okay, you find it very, very amazing. Now, we are starting from April 1st to 30th of April. Now, basically, all you want to wait for is moving average crosses. Okay, moving average crosses. Now, how do you day trade this? You want to understand order flow in price. Okay, order flow in price, order flow in price. Now, order flow in price is basically the direction of the trend. You can either use a moving average of 200 or 50. Okay, you can decide to use exponential moving average 200 or 50. Okay, 200 or 50. Now let's check 200. I prefer to use 50 though, but let's check 200. Let's see if it aligns. Okay, it doesn't align with what I want to do. Let's check 50. Okay, good, good. Now, you always use exponential moving average 50. Okay, you have three exponential moving averages on your chart. We have the 9, the 18, and the 50 exponential moving average. An exponential moving average is a tool, a trend direction tool that helps us identify the trend direction. It is gotten by calculating previous price data to get an estimate of future price data. Okay, you can use an exponential moving average on your chart, but don't rely on indicators. Indicators are good, yes, they work, but it's not something you want to rely on for making trading decisions. Okay, I'm very sorry for the breaking connection. Very, very sorry for the breaking connection. Share my screen back right now. Okay. Share my screen back right now. Okay, so I was answering Eric's question. Okay. And Eric, I said an exponential moving average is a tool that helps in calculating the trend direction. Okay, it's a trend-based tool that helps in calculating trend direction. Okay, so it helps in calculating trend direction, and it is calculated based on previous price action. That's just basically what a moving average is. Okay, so exponential means it will be fast. Simple means it will be slow. It has a lot of features attached to it. So back to the charts now. Back to the charts. Now, I said we will be using three moving averages here. Okay, three moving averages such as exponential moving average 9, 18, and 50. Okay, so let's start from the new month. Okay, new month of April. Now, new month of April, we had the 9 and the 18 crossover. It's telling us that price is bullish. Yes, but we don't want to buy at that moment because of price is bullish. We want to wait for a reaction. The reaction is we want the 50 moving average to cross. Now, once the 50 moving averages cross the 9 and the 18, all you need to do is, that's from the 4-hour time frame, all you need to do is go to the 1-hour time frame, okay? The 1-hour time frame. Now, let me mark out that area on the 4-hour time frame where it crossed. Let's mark out that area as, that was where it crossed, that big black box there. Okay, so now there, right there, okay, right there. Now, where it crossed is basically going to be an area of support, okay? An area, you see, go and back test this. You would figure out that every single time it is either it's an area of support or an order block. Now, I prefer it being an order block than being an area of support. And let's look at it closely. It is a previous what? Order block. Drag it into price and boom, there you go. You get your entry. Now, you don't need to buy immediately because it's here. No, you can just wait and wait for price to return to it. And you see, every single time price returns to an order block, if it is really an order block, okay, price will not return to it if it's not an order block. Sometimes price might not even return to it fully. Price might just get to it closely. And once you place your trade, your target is an old high, okay? An old high, and see what happened. Price delivered to that level. And just from this, you make 9% of your trading account in just a single month. With one trade, you make 9% of your trading account. Now, let's go back to the 4-hour time frame again. Now, what we want to be looking for on the 4-hour time frame is moving average cross to the upside. Now, we did not get any new one anymore. I would not try to force a trade here, not at all, because this is not something I like to participate in. Now, look at the beginning of the new month. We have the three of them crossing at the sweet point. Now, from the 4-hour time frame, we have an order block there. Let me just mark out where it crossed. Let me mark out where it crossed. Now, all I need to do is go back to the 1-hour time frame and go and look for my entry. Remember, I said every single time price has to come back to that area, except it's not an order block, okay? Or it's not a valid area of support. Now look at it right here. We have the I, the candle, the bearish candle, which will act as support, and see for yourself. You got an entry two times. The first entry, this candle, second entry, this candle. Now imagine you decided that, okay, from previous price action, you can see how high it goes. You will not say that, or you can decide to say, your first entry, which is here, your first entry, which is there, You want to target an old high, which is this week right here, the old high right there. And you make 4% of your trading account. Now, I'll make mention of something. And your second entry, you now decided that you want to do 2 times the 9%. Okay, 2 times the 9%. That will be 18%. Okay. Now, these are 2 months now. 3 trades in 2 months. First one, 9.3%. I hope somebody is writing the percentages down. 9.3%. The second one, 4.38%. The third one, 18%. Now, let's go to the new month. Now, the new month is no more going up again. But you, as a smart trader, you've gone back to the 4-hour time frame and you've noticed that what? Market structure has broken. So you are a smart trader. You'll be looking for what? Selling opportunities, because market structure has broken. BMS, break a market structure. You'll be looking for selling opportunities. Now, your first trade would have been, I guarantee you one thing, which is if you took a trade here on the 1-hour time frame, you would lose money, which is normal in trading, okay? Which is normal in trading because the losses will be minimal, and I'll show you how the loss will be minimal. Your second entry would have been here, where that crossover happened inside this area here. Now, why would you lose money here? Because of basically that's how price is supposed to react. Price is supposed to like react so that some people will lose money, so some people can make money. Okay. Now, let's go to the 1-hour time frame. Remember, we've made 9.3%, 4.8%, and 18%. Okay. Now, let's see how you would have lost money here. Now, how would you have lost money here? This was where the crossover happened. This is where your order block is. Now, some would have lost money and some would not have lost money. I'll show you how and why. Okay. Now, you took your trade here. You are risking 0.28%. Your take profit is below old high. Now, common sense was supposed to initially allow us traders to lock in our profits. Okay, now let me check how many percent it moved here. Let's check how many percent it moved. Now, basically, it has moved 2%, 2 good percent, which is enough reason for you to lock in your profit. That means to break even or to lock in a bit of profit. But no, we won't lock in profit because we believe it works, because you've made money, huge money 3 times. So you lose this trade. Price goes against you, you lose it. Now, the second time for the crossover, you might have missed this trade. I'll be candid with you. Because number one, if you were entering based on order blocks, you would have missed this entry also here. Okay, let's mark out every opportunity you could have used to enter this trade. That's the breaker block there. You would have missed the trade by a few amount of pips. Okay, this is another breaker block here. Price never came back to it. You would have missed that trade also. This area also, this order block here that you could have gotten into a trade with. Coming. Price never got to it. So you miss out on this sell in this month. You miss out on the long sell of this month. I will leave us all to go and practice July and June. I'll leave us all to go and practice July and June. And for August, don't decide you want to sell now or you want to buy. Wait for, this is still a new month. This is high of the month. We should see low of the month soon. So just from what I know, without using moving averages, gold will sell this month, okay? To sell massively this month. Position yourself for a sell. Now, let's do the good math, okay? Let's do the quick math. Here we lost 0.28%. Now, we'll do the mathematics very easily. We made 9.3% previously. Okay, let's type that in a calculator. 9.3 plus 4.38 plus 18. That's 31%. 31.68% minus 0.28. That's 31.4%. Just from this single strategy, trading once or twice every month, you are able to make 31.4%, which is above 25% of your trading account, which is 100%. You see, it's very easy, but the problem is every single day we want to trade in the financial markets. Every single day we want to place a trade. Every single day we are looking for trading opportunities. Yes, it's fine to be like that. Trading is addictive. Trading in the financial market is addictive, yes. But be addictive to trading, or be addicted to trading in a good way. And you can see how it happens over and over and over again. Every single time it happens. That's basically exactly risk management. I was managing risk. My stop loss was never too much above the my stop loss was never too much above the order block. It was always there where it's supposed to be. Where it is supposed to be. There's a GBP news coming out by 12 o'clock. If you're in any GBP trade, please stay safe, okay? Please stay safe. I think it's going to be bearish though. It's going to affect GBP in the bearish way. Well, I'm just a financial analyst and an educator, so I can't really say if it's going to be majorly bearish, but I see it falling hard, GBP falling hard during 12 o'clock. And I can be wrong also, and I would like to be wrong too. So 31.4%, just basically looking at the charts few times in a month. Spotting opportunities on the charts few times in a month. It gets easier every single day. It gets easier every single day. Every single day. It's not difficult at all. It's something you can do just using the strategy. That's how you trade gold. No stress. Gold doesn't like you yourself stressing on, or financial market doesn't like you stressing on it. Because when you try to strain your eyes, force your eyes to see certain trading setup or a setup that is not there, you end up losing money. You end up losing money. That's the truth. And most times on the Telegram group, I always advise, so that I can comment on your analysis every single time, I always advise a top-down analysis so I can view price from a higher perspective. If you are doing your analysis, do it from the monthly. It won't kill you. It will just give you a better view of price. It will give you a mindset. Like you can see Kelechi and I discussion this morning. We're talking about GBP USD and DXY. We said DXY is bearish, long term, medium term, okay, long term, medium term. But basically long term is bullish, but medium term is bearish. And that's giving us an idea that we'll be buying GBP USD to a certain point and selling GBP USD at a certain point. All because of we were able to understand these things from a higher time frame perspective. It's easy to make money from the financial markets. It's very simple to make money from the financial markets. Don't complicate it. Simple strategies work. Not everybody needs to know smart money concept. What I just thought is smart money. The creator of smart money, Michael Hudson, uses moving average once in a while. If you go through his course, he uses moving average and other blocks. I just taught you, or I just gave you an holy grail, okay? An holy grail. It's not really an holy grail, but if you do well to practice this, it's an holy grail. There are people that use, I tell people, not you don't need to know pure price action. You just need to have something that works. Sometimes it's not even about the strategy. The strategy is good, can work 100%, and still you end up losing money trading it. Now, the reason you end up losing money trading is not because of you don't know how to trade. It's because of your risk management is not good. You don't know how to manage risk. You're entering every single trade at every single time. You are using a leverage of 1:2000. That won't. I think the idea behind leverage, or what everybody thinks about leverage, is leverage allows you to make a lot of money. Yes, it gives you opportunity to open more trades, open more position, and all. There was one time when I was trading, I was using a trading account with unlimited leverage. Yes, I did a lot of magic with that account. I was hopping into challenges with a couple of colleagues, doing $10 to $50 every week, $10 to $100, $10 to $150 every week, because of the leverage was big. I can open positions and my capital would get affected, but I can do a lot with it. But the truth is, it's bad. It's not good. It's bad. It's not good. I stopped. That's why at Eagle Global Markets, we offer you a leverage of 1 to 200. That's the best for you to get started. You won't be able to over leverage. If you over leverage, you lose your account. We are protecting you from losing your capital. We are giving you an opportunity to survive in the financial market over and over and over and over. But you keep on calling in that you want a big leverage, because your friend is using it. Leverage doesn't allow you to make a lot of money. Yes, it gives you an opportunity to open trades. Even if your trade is wrong or right, you lose money either ways. Okay. But the simple truth is, if you don't have a good risk management and you can have a perfect strategy, it still won't work. You keep on hopping around for strategies, thinking one or two things is bad. Nothing is bad. Nothing is bad at all. You're the one not managing your risk the right way. You're the one not applying a good risk management. You're the one not doing the right thing. Okay. And that's just the conclusion. That's the conclusion. Gold is easy to trade. Even with a small account, you can trade gold and be consistently profitable once you practice all of these things. Once you practice all of these things, it's easy and it's good. It's amazing. Like, the financial market gives you access to wealth. Imagine just sitting in your room and making money. Like, most people think it's a scam. Well, I don't blame them, but it's one of the best way to be financially free. Trading global financial markets. Imagine you're just clicking a few buttons. You work for it. Don't let me say you do not work for it. You work for it by analyzing, by taking losses, by paying your dues. Okay. You work for it, but just sitting at the comfort of your home, and making money just from that alone. That's good. That's good stuff. So I just sent out two polls. Let's respond to it. Okay. Let's respond to it. And that brings us to the end of today's webinar. I'll be going through the questions right now. I'm seeing a lot of bans in the Telegram group. I'm watching the BOE also, like waiting for the news release. And GBP dropped hard, like I said. GBP dropped hard. I mean, GBP JPY at the moment, and well, it's profitable. GBP JPY at the moment dropping really hard. I'll share my screen right now to show my entries. I'm not sure I have an entry on this account right here, on this MT4, sorry, on this trading view account right here, but I'll just show you guys where I got my entry from. GBP JPY, let me type it in. Wow, that was fast. The moves were fast, like down and up immediately. Well, they already gave us a direction. It's on us to follow. Okay, so let me just hide all of this. Now, this moving averages, I only use it to teach, what's it called? I only use it to teach how to trade gold. I don't use it for currency pairs. Okay, let's not make such mistakes of using it to trade currency pairs. Okay, I got my entry on the 1 hour, I think. Yeah. Sorry, from the 4 hours. Okay, now I got my entry from the 4 hours, 2 entries actually. I stacked positions because of my risk management was good. Yes, I got my entry at first entry at 152.458, 152.458, and the second one right below it. So I'm still good. I'm still good with that. Still good with that. So that's just it. Like, I expect this to happen. You take out this old low, first partials, yeah, then final take profits right here at this old low. So that's just how it's done. Brilliant, easy, not stressful. Okay, not stressful at all. Exactly, the value is still the same. No changes in the value. Well, good for them. Good for now. You know the most amazing thing about the financial market is good or bad value, you will make money if you are not caught up on the wrong side. Good or bad value, you make money. Is it that you buy or you sell? Good or bad value, you make money. As long as you're not caught up on the wrong side. As long as you're not caught up on the wrong side, you surely make money, good or bad values. Okay, so that brings us to the end of today's webinar. I'll be going through the questions right now. Um, what can a beginner do to get along, and how much is required to start trading? You can start trading with basically 10,000 naira, but I'll be candid. I advise you to deposit more than 10,000 naira. Okay, the market can be very volatile, and your 10,000 naira might not be able to protect you or keep you staying long in the financial market. So I advise you deposit more than 10,000 naira. Okay, just more than that to keep you protected and all. Okay. Um. Yes, it's not done like that anymore. That's why the dollar and gold correlates negatively. Okay. It's not done like that anymore. That's why the dollar and the gold correlates negatively. Okay. It's not done that way anymore. That's why they correlate. They all correlate negatively. Okay. That's why it's all correlated negatively. That's why. So, any questions at all before we end the meeting? Any question at all before we end the meeting? Any question at all before we end the meeting? Okay, no question. In the absence of no question, I'll just say this truth. Okay. Now, most people are scared to hear the truth, but this is the truth. The truth is, profitability comes to everyone at different time. Some people start trading last 2 months and they have made, they have started, or they are profitable, very, very profitable now. Some people started trading 2 weeks ago and they are very profitable. Some people started trading 5 years ago and they just gained profitability last week. All in all, profitability comes to everyone at different time. Don't rush it. Enjoy the process. Don't rush it. Just be involved with the process. Enjoy the process. Profitability will come to you at your own time. Don't stress about it. Profitability will come to you at your own time, at your own distincted time. Okay. So, like I said, to start with $100, which is 50K, is not bad at all. Starting with $100, which is 50K, is not bad at all. Okay. So, this brings us to the end of today's webinar. Good luck and good trading.